Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Avanti Feeds, one of the very marquee stocks of the last 5 years but had declined a lot in 2018. So let's understand how was the results this time around and what you should do. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. A little bit about Avanti Feeds. This is company is in the business of aqua feed, and it is a market leader in its segment and provides aqua feed products in India and abroad across the globe. The operations are primarily in India, US, and Europe, and they have a tie-up with a leading Thai company which provides aquafeed products, and that's how they have a very big market share in this segment. Uh, it has a very good cash flow and return ratios, plus gives a decent dividend. So the company is was regarded as one of the best mid cap stocks to buy during the 2013 to 17 run that we had. But later on, we had seen a fall in the stock when the results went out in second half of 2018. But how was the numbers in the FY20 Q2? That is this quarter. Just a few days back, 2-3 days back, we had numbers of Avanti Feeds, and they were absolutely marvelous. We see that the sales grew by 41%. The profit went up by 133% year on year. These numbers are. So this is Q2 FY20 compared to FY19 Q2 numbers, which was dismal, yeah, to say the least. EPS has been 8.7 rupees versus 3.4 rupees. The margins have been fine. I won't say that margin is blowing the lights away. Just over 11% net profit margin and an operating profit margin of over 13%. And the margins are on an average lower than what they were, say, in 2016 or 15. And probably that's why I would address a little bit of caution in buying at the moment with this 12-13% move that we have had today in the stock. But let's see what could be expected of the company later on. So, what are the positives for the company, or what could go right for the company at the moment? The valuations are pretty nice. So, at the moment, you would say that the company is trading at no more than 20-25 times, 20 to 22 times FY20 earnings, the complete earnings, which is not very expensive for a company that used to trade at something like 30-40 times or even 50 times earnings. It has a leadership in its position. So as I mentioned in the Can Slim model as well, that one should look at companies which are leaders in their businesses and are producing very good 30-40% growth Q on Q or year on year. So this fits into the bill. The management is good, and we have seen what has happened with Infosys, and I'll make a detailed video on Infosys later on when all the picture come out, when everything comes out into the picture. But we have seen even in Infosys there is a skepticism that the numbers are being cooked up. So here in Avanti Feeds, till now that we have witnessed that the management has been transparent and producing very good numbers and giving guidance as to how the numbers would be, and they are abiding by them. The dollar rupee equation has changed, and now we are seeing that the dollar rupee equation may shift to 75 rupees a dollar or 76. That would help Avanti, because a lot of their revenue comes from exports to US and Europe. Economic growth that has been projected in the world by the IMF has been pretty good at over 3%, and that would help in the growth of Avanti Feeds. And you can understand that the growth in the aqua segment, or in the segment of products like fish, etc., that people have, seafood business, that has grown sharply over the last 3-4 years and is expected to grow even further. So one needs to take that into account when you're buying into, say, Avanti Feeds, and lower tax expense from the Indian government would also help. So, for instance, they were paying around 34% tax before the tax reform that took place by the BJP government at the moment. They're paying lesser taxes, and that would help in the short run for the valuations. To be a little low at the moment, and for the company to produce better results in the next 2 quarters as well. Now, what could be the negatives? Well, the taxes that have been put up by United States on aqua feeds from abroad is quite alarming, and that's why the stock fell in the second half of 2018 till now, and the stock fell very sharply from highs. About 50 to 60% of their market cap had gone, and that has not changed. And with Donald Trump at the helm, it looks like things could get even worse for companies that are exporting into US, because he wants that the US companies do much better than what the foreign companies are doing, and he wants to curtail imports into US in all segments. So aqua feed is one of them as well. Political uncertainty abroad is also questioning the sales of the company, especially what is happening in Britain with Brexit, etc. Once that get resolved, then again it would be a big positive for Avanti Feeds. Looking ahead, I would say the growth might not be the same as was expected, say, about a year back, or what IMF is calculating at 3.4%. If the growth doesn't come out to be that good, then Avanti might not do well, because as I explained, that the most of their business is exporting abroad. So one needs to take that into account once you would like to invest in such a company. And there's always a scare of FDA. Although this is not a pharmaceutical company, but yet there is always a scare that the FDA would come up with some of the stringent actions for their products, for their aqua feeds that is being exported, because they have a very complicated and stringent, you can say, inspection procedure. So once Avanti doesn't comply by that, it would be very difficult for the company to reinstate their products in United States or Europe. Although it is a far cry from what is happening at the moment, but that could be one of the threats that the company might face in the future. So what needs to be done? In my opinion, what you can do is buy on decline. So buy in tranches and on declines. The stock has gone up very sharply. So when the market is bad and the mid cap and small cap index fall sharply, you can buy it around 400 to 420 range, and have a 5 to 7 year view. It is a very good company to give you a 25 to 30% return if the profitability continues the way it has been shaping up for the last 2 quarters. The company has done well on the top and the bottom line. So one needs to keep that into account, analyze the results, and buy in tranches whenever every month the stock falls. So buy as an SIP, and have reasonable expectation. You can never have the same movement as we had in 2013 to 17, where the stock became something like 20 or 30x in those 4 5 years. But you can easily make 2 to 3 times from these levels if you buy intelligently into the company. So this was my video on Avanti Feeds. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.